Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking crude oil, you trade the WTI contract here, but Brent was the driver of the crude oil move today. A Saudi headline really caused Brent crude oil to shoot up near $80, and that headline consisted of sources being reported to have said, sources supposedly close to the royal family in Saudi Arabia, that they were getting very comfortable with the idea of crude oil right around $80. That, of course, pushed Brent crude up to around $80, taking WTI with it. WTI got above 70.17 on the high side, being up almost 2%, coming down in toward the end of the day to settle up just under about 1%, getting back in that 69, that lower 69 handle, around 69.37 on the November contract. Now, that Saudi headline basically is saying that if the Iranian sanctions are working, they're not necessarily going to produce more to offset where crude oil is. Now, this is just a headline. It has very little to do with supply and demand, and that explains a little bit of the sell-off that we got later in the day in toward the close. Crude oil, actually, WTI specifically, actually finished the day closer to its lows than its highs. But speaking about Iran, we're getting some information out of some services that we follow that Iranian tankers are turning off location trackers. They're called transponders, and they're the sort of GPS systems that a lot of different services and a lot of different oil majors use to track how many tanks are on the water moving. So this gives kind of the impression that Iran is pumping and trying to hide some of those tankers. Now, Iran in the past, during the past years of sanctions, would fill crude oil tankers as storage and just leave them on the water ready to be shipped. This doesn't mean that they're shipping crude oil to places going against the sanctions, but it could mean that. So the two of those things together kind of drove crude oil higher, and then later in the day pushed it back down as that sort of sifted through the market. Now, another thing we're looking at is the Brent WTI spread. Now, that spread started the month of August at about $6.46, jumping up about $3 by early this morning to about $9.50 some odd cents. So it was a little over $3 higher. Now, that spread will cause one of two things if it continues to widen out. Either WTI to snap higher on a relative basis versus Brent, or Brent to come down back in toward WTI. The reason for that spread is WTI is landlocked, and the purchases of crude oil have to pay for the transport from the wells to where they're going to refine it or export it. That isn't the case with Brent. So that spread actually can tell you what the proper movement should look like, and that widening of the spread is probably too much, too fast to sustain. That's probably also why we got a little bit of a sell-off in both contracts in toward the end of the day, and that spread came in a few cents as we got in toward the close. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.